shall start sharp. This morning, we're going to cover the old way of finance and managing some MD help you to manage your P&L, your profit and loss, your return on investment. You ask, what is finance to you? Finance is about transaction. What kind of transaction your company do? Do you inject capital? You do sales, right? When you sell cash, and the rest you sell credit. Take note, when you sell credit, you receive cash for credit sales. That's called collection. These are called transaction. You do purchase. You purchase manpower, you purchase raw material, whatever. You purchase either by cash or you buy on credit. When buy credit is what? You make payment for credit purchase. This is another transaction. And after that, do you have operational expenses? You do have, right? Rental, depreciation, all the utilities, all these are operation. After that, do you do investment? Sometimes you don't have money, you don't borrow from banks. All these are called transaction. Money, bloodline. And do you give dividend? Sometimes half yearly, based on board approval. And finally, do you pay tax? Which comes first? Finance comes first or accounting comes first? Finance is the key, it's the mother of all, remember. It's a transaction, it's a strategy, it's a transaction. Accounting is recording into where? Into your books. Just recording. They call current asset. All this less than 1 year. Example, cash, debtor, stock. Non-current asset, they call more than. All these are terminology in the accounting world. In the reporting, you can see non-current asset, more than 1 year. Example, plant, property, equipment. Very important word. Asset is equal to liability equity. Let me explain one or two more concepts. What is called account receivable? It means that when I sell $1 to you, you only pay me 20 cents. Another term is intangible. Like example is goodwill, patent right, IP, software. All these are intangible. What is AP? What is accounts payable? Accounts payable means, if I purchase from you, but myself, I'm a snake. I pay you only 40 cents. 60 cents I have not pay you, right? In my book is accounts payable. I have not pay you the balance. This word, you buy from a supplier, you have not paid a supplier full, the balance is called accounts payable. Liability, this owner capital less withdrawal is your equity here. And revenue minus expenses is called what? Profit, right? Okay, now we're going to cover some concept. I'm going to walk you through looking at P&L. ROI stands for what? Return on investment. Right? If you're doing business, that is a heartbeat. Even though you don't have accounting experience, you follow this template, you can do a forecast P&L, your balance sheet, your cash flow. I mentioned just on the objective. You want to look at your P&L, your ROI, your cash flow, and to produce a financial statement. And then followed by, all these are transactions. So after that, followed by reporting. Reporting means your financial performance. This is called your P&L. And this is called equity. A simple exercise, inside nothing yet. And then this is called your balance sheet. Then followed by your cash flow. And then, of course, you will go all the way down to analysis. This is important. Why I ask you to practice this is, now it's come to payment, right? You buy 750. How do you pay? Make sure you pay less than what you collected. That's why some SME go bankrupt. They spend, but they're not able to collect back. So they hit the cash flow and they just tap out. Take note, if your cost is 30%, if your operation is more than 70%, you lost money already. Let's move on to take loan. Do you take loan or not? Do your company take loan? What's the basis of taking a loan? You have to sustain your staff, right? You don't have enough cash. Some have a lot of reserve, some don't have. And so again, you decide how much you want to take. Say you want to do this business, 2.5 million, assuming you take 30% on your sales, 2.5 million. Assuming you take 748 example. All right. To sustain your operation. All right. You need this fund. to pay for your operation or for your sales, for your staff, all this, you take over. Assuming again, the bank charge you 3.5. So how much you pay per annum? Okay, so it becomes 750. How much interest you pay? This interest, right? Interest payment. Very simple. The formula is you take this amount for a bank, assuming they charge you 3.5% per annum. You pay 26,250 per annum. What's the meaning of trial balance? You try to balance asset must equal to liability and equity. Total asset minus total liability and equity must give you 0. 1 0, you have completed your accounting. You have completed accounting. This is called a trial balance. You have completed your accounting. That's where, as an MD, as a manager, you are interested in the reporting, the financial performance. And approved donation is still under Section 44 of Income Tax Act. The gift of money made to government, state government, local authority, or any approved institution. Very important, huh? Where are you now? In terms of, now we are talking about ROI, right? It can be your sales, it can be a profit, it can be your cash flow, it can be your budget, whatever. And the next question is where you want to be. That means if my ROI is just now is 77%, right? I want only 30%. How to get that means is a strategy, is an input value. In Excel, they call data voice analysis basic. Excel means where are you now? Where to value means where you want to be. What management wants? Management give me a realistic figure, 30% example. Make sure percentage to percentage, number to number, dollar to dollar. If I put 30, it won't work. It has to be 30%. You see, this one, file, option, add in all this, right? Go, tick in, okay, solve, right? Set objective, where you now? Set cell, where you want to be? By changing variable, these are the multiple strategies. Finally, make sure align variable cell with constraint and solve. And I want to bring in this concept, solver first. J. Excel include a tool called Solver that uses technique from operational research to find optimal solution for all kind of decision problems, all kind. These are called blue ocean strategy. E stands for elimination or reduce or remove. Then you look through R, reduce. Why can reduce? Non-value added functions. A lot of input but little output. Or non-critical areas, non-critical budgets. Non-critical, just cut it off. Right? Raise. What you want to raise? Like your this is MDEC, right? Digitization, more digitization, more technology. Create. This is where they think of MIS. Multiple income sources. We cannot think of one source, we have to think out of the box. Look at your profit and look at your ROI. Are you happy with your 1 year ROI? Return on investment. If it's negative means either you have to increase your net income or reduce your investment. Either one. Now, I want to move further down, my friend, to cash flow now. Look at your cash flow now. That is when you collect cash upfront. And then you collect cash later. Two part. Cash flow means actual cash, and then I pay for all my OPEX. Operational wise, I only left 97 million. You sell more important is make sure you collect more at upfront. Up to a certain extent, I do a lot of consultation for some SME. They borrow so much at the end, they are working for a bank. Be careful. This part, because bank also want business, right? You can take from a bank, but it's interest bearing. Right? Today I cover up to how to increase cash flow. Either you collect more, you sell more, or reduce your expenses. Expenses are two parts, cost of sales or OPEX, or change your term of payment. This is very important. Or inject more capital. Many options to sustain, to survive. That is a very practical. I did that for many SME companies. To really guide them through how is their break-even point, what's the break-even point, what is their, how to increase the cash month by month. Why we look at that. Today, I'm going to show you how to read the financial statement. And today we're going to look at this part called ratio, financial statement. As I mentioned, financial statement is 4 P's, P&L, balance sheet, equity, and cash flow. Who are these people interested? Accountant means the management. Management like you, right? You're the management of a company. You want to look where are the strength and weakness. Bankers, when they want to lend you money, they'll ask you for your financial reports. Investors, so they will look at which counter, then they will analyze. Are you liquid? Liquid means they're going to look, that means are you able to pay them? Efficiency, right down, that means they look at your debtor. You see, they will also look into your asset management. How well you manage your asset, your fixed asset, and your current asset. Profitability is how profitable is a company. Gearing is where the debt. Are you over debt? Are you over traded? This investment ratio is for investor. They look at PE ratio. Is your company got prospect for growth? No prospect, they give up. Investor will look at PE ratio. The bankers will look at your gearing. Can you pay my debt? Normal management will look at all this, how you manage asset, your profitability. So these are the core area. Basically, financial statement analysis is they have to make better decisions. Right? That's the whole purpose. And so using 4 tools to analyze any company, whether they're listed or non-listed, basically the same 4 P's. Income statement, balance sheet, equity, cash flow. So these are the ratio which I'm going to put into Excel. Number 4, financial analysis. We have many listed companies here, UEM, Agenda, all these I train them. UME, MMC, Eon, right? Crystal, Perak. The whole purpose is once you know how to analyze one company, you can analyze any company. Eon is a more stable company. Okay, assuming you are one of the vested interest party. So our whole purpose in any annual report, we want to review the financial performance this year, review the asset management, review the cash flow, any red flag. Assuming you are the interested party, interested in this, and you have your financial position. I mentioned is your what's financial position again? Balance sheet, balance sheet. And normally here shows group and company. And normally we look at group. See here, you see some terminology. This I mentioned, right? Total non-current asset. This is more than 1 year, right? And then this is your current asset, less than 1 year. Your total asset here, right? Remember, I explained those concepts. And then this is your equity, right? And then this is your liability. Liability, there are 2 parts. One is non-current, more than 1 year. Current liability is less than 1 year. This is called total liability, right? So you can see the sum here. The sum, right? Total liability, right? Must equal to your, right? Your total asset, this asset, right? 4417. This in terms of million, 4417 billion year must funded by this figure. Okay. Then further down here, you have your P&L. But you observe why there's a drop of how much? 254 million over a period of 1 year. This Eon. Eon is a retail, is a cash business. Why like that? You pay either cash or credit card, right? When we go to Eon or Giant, we pay cash or credit card or cash. But why cash gone up so much? Normally, we start from the top. Top, let's see the operation level, right? Operation this year. Wow. Top, from top level. We analyze line by line. Do you realize the big number is here? Payable and accrual. Focus on the big one. What is accrual? Accrual means you use but you pay later. We pakai all the electricity, all the aircon, right? When the bill comes, but we use up already. This is where the accrual coming. You use some, but you pay later. All this must be factored in. So you see that means majority is Eon tactic is delay paying supplier by saving about 145 million. Even though their profit drop, but because they delay paying the supplier, they still make 168 million year cash flow. BAFNA means, it means if you are Eon, you know the suppliers are very small, because there are thousands of SKU, thousands of products, all are small suppliers. And you know that they don't have much bargaining power. you dictate. You supply to me, this is my terms, take it or leave it. And some of these suppliers, they have no other choice to go. Others also same. You go to Giant, you go to Tesco, all the same. They cannot threaten you unless they gang up. When they gang up, that's the time they panic. This is the time they invite you to talk. They'll pay more to you, pay less to the bank. Because why? They want to expand. They want to use the money to expand instead of paying the supplier. But they also take care of banker. They have a lot of commitment. Yeah. So again, the position is they use the money to grow, expand. These are the retailing group. So the share price, if your market perception is good, it is up, earning also up, share price very good. Before I move on to Z-score, this is the output of a credit strength test that gauge a publicly traded manufacturing and even listed company or whatever company, the likelihood of bankruptcy. It uses profitability, leverage, liquidity, solvency, activity to predict whether a company has a high probability of become insolvent. This one is a Z-score, is an insolvency predictor, right? Measure 5 key ratio. 5 key ratio, these are 5 key ratio. Very much on total asset. All these are total asset. And they based on certain scoring, right? But generally, this can be used. A stands for this one. Your earning against your asset. They put very high weightage. B on net sales. C is on your market value equity, right? D is on your working cap. E is on your retained earning. They put certain weightage here. And there's a scoring here. Right. Again, this is a guide, just a guide. If you score anything above 3, your company is okay. Again, this is a strategic area. Because management, a lot of non-finance people, they only see big picture. When you give them input like that, they appreciate a lot. I train all this topic. I train finance, this is what I train. I train budget. I didn't touch much on this. I do fast closing, P&L, analyze financial statement. I do some work here, right? I train lean management, cost cutting, budgetary and cost control, cost reduction, KPI. I mentioned KPI. I do a lot. Strategy planning. I do a lot of risk, right? Procurement, cost reduction, turnaround. We are losing money, turnaround. I do a lot of corporate tax. Right? I do SST, withholding tax, employment, deferred tax, and corporate tax. Right? I do managing P&L and cash flow. So these are the 16 major topics I cover. Contact me. You want a short session, half day, whatever, no problem. Thank you very much. Julissa, thank you very much for inviting me.